Today we'll be looking at Carlsberg, a Danish company that makes beer. Carlsberg is actually a pretty reliable stock that pays out a nice 2% dividends. Today we'll be analyzing the stock, talking about where this company is going in the future. So let's get right into it. As you can see, this is simply Wall Street, and this is the tool that we're going to be using to analyze this stock. But first of all, I want to bring you onto their website. So this is Carlsberg's website. They make this beer and they sell it in, let's see, Western Europe, Eastern Europe, and Asia. They are making beer, and it's just all kinds of beer, and they collaborate with different farms and different people. Here I can see they made some beer with some honey that they collaborated with. They've been around for a good bunch of years, and yeah, they know what they're doing. They are deeply embedded into Denmark. I can say that because I live here, and I think the whole North and Asia. I don't really know too much about how this brand has been adopted outside of Denmark, but we definitely drink a lot of Carlsberg beer in Denmark. So yeah, that is all I can tell you about that. So the snowflake here, you can see established dividends payer and fair value. So all looking pretty good right there. A little bit about the company. Carlsberg engages in production and sale of beer, other beverage products in Western Europe, Eastern Europe, and Asia. So you can already see here, before we get into it, that they got some stars right here with some good things that analysts say are pretty nice. And there is one risk check. There's one risk that has detected, and that is a high level of debt. So we'll take a look at that later. You can see here Carlsberg's competitors. You can see definitely Royal Unibrew, which is also a Danish company. If you want to see a video on Royal Unibrew, then make sure that you subscribe, because that is coming up. Now it's going to get pretty exciting, because the valuation here. Carlsberg is undervalued compared to the fair value, and its price relative to the market. So they think it is 50% undervalued. So right now the price is 1,070 kroners, and they think it's worth 2,000 something. Their PE ratio is laying at 22 compared to the European beverage industry, which is at an average 28%, 28 times price to earnings ratio. So you can't compare that to the Danish market, because the Danish market has a PE ratio of almost 16. So yeah, the Danish market is actually pretty fairly valued or undervalued, if you compare that to for example America. So that is actually also why I really like to find stocks in Denmark, because I know a bunch of companies here, and I think they're really, really good value. Something that I definitely also want to show you about this value is price to sales right here. That we're going to get into that, but first of all, the forward PE, look at that, 18 forward PE. So that is based off of the future predictions of their earnings in the future, and 18 forward PE, that is very good, because this company actually haven't got that good high profit margins. I guess that is something with the whole industry that is the case. The fact that they're bringing that PE ratio down substantially in the future really says something about maybe their margins expanding. So before we get into, I don't think that is not here. Before we get into any of that valuation stuff, let's look at the future growth, because that is also a big player in this whole valuation thing. Carlsberg is forecasted by analysts to grow 6.3% annual earnings growth. So you can see here, yeah, pretty plain, and we are also going to look at the stock price a little bit later. And the stock price, honestly, I can actually just do it now. So you can see here the stock price, it hasn't moved that much. Okay, yeah, the past year it's moved a bit, but when I looked at it, I think a year ago, I was interested in buying it. It was at somewhere around 1,000 kroners, and it's still there. So that just says something. You can see here the volatility, the price volatility. Here's the industry, and Carlsberg is underneath that, and the average market is here at a 5.4% volatility, and Carlsberg is significantly below that. So it is not a very volatile. It's pretty stable, to be honest, and that is it kind of works together with the whole dividends thing, that they're not that volatile, because otherwise, what is really the point of that dividends? So you can see here about the company. They are founded in, I don't even know how many years that is ago. They have 40,000 employees. I guess making beer requires a bit of hands to do that. But here I really like this actually, Carlsberg fundamentals summary. You can see here the price to sales ratio of 2.3. You can see that is actually pretty amazing, like a price to sales of that. That means that the revenue makes up like almost half. If that was on 2, then it would be half of the whole market cap in just 1 year, right? So that is actually pretty amazing. But then you can see, because their gross margin is like 47, but their net profit margin falls quite a lot to 10%, and that is also why their earnings, the PE ratio, is significantly higher. They are working to get that down to 18. We can see that on the future PE ratio, which is 18. So yeah, that is I really like the price to sales. They really got some significant volume compared to the share price. So let's so we looked at the future growth. Now let's continue with the past performance. So actually Carlsberg has been a pretty rapid grower over the past 5 years, with 16.2% historical annual earnings growth. So that is pretty significant, I would say. Like, it's not some kind of crazy tech company, Silicon Valley startup, Tesla thing. It's just, they're just selling beer, really. So I think they've developed a strong brand in these countries, and I think they're all like, especially coming out of like the whole thing that's been going on, like festivals, Coachella opening up again. I don't know if they got Carlsberg in Coachella, but I definitely know that we have like a festival in Denmark that is like the biggest in the north, in the Scandinavian countries. They're drinking a lot of beer in that festival, believe it or not. So that is definitely going to help, because that has been cancelled the recent like that festival has been cancelled the recent like 2 years. So like, I think that beer usage is just going to go one way from now, and that is also why I'm looking to get into this stock myself. So yes, the financial health. Okay, so we can see here they also said with the risk check, like, that they had a high level of debt, and the reason for that we can see here, right? In the short term, they have their liabilities exceed their assets, and that is not something that we really want, but I don't know, I see a lot of companies having this, and then in the long term, with their long-term liabilities, they are so much under control. So I don't know why they have got that much debt. That is really up to you. You just want to work that into your whole analysis of the company. So that was the financial health. You can also see that debt level is pretty significant, and imagine it's going to take some capital to make beer. I guess that is the case. Okay. So the dividends, let's look at it, right? I actually think that you can, if you buy, all right. So Carlsberg pays out a 2% dividends, and I actually just want to see like historical payments. Like here we can see the blue line is the dividends yield in dividends yield is in the dividends yield is the dark blue line here, and you can see, where are we now? Okay, so they're expecting, right now we're here, right? And they're expecting the dividends to like go to 3%. So I actually would consider buying this for like a dividends portfolio, because it is not very volatile. It is actually significantly undervalued, and you get a 2% dividends. I know it's not the highest dividends. You can like get a dividends ETF with like 8% dividends or something, but 2%, you know, I can't complain if that is just like a bit of my portfolio in this company. So definitely dividends is something that you could consider buying this stock on the back of. So stable dividends growth, stable dividends and stable dividends growing, so that it has been growing. You can see over the past 10 years has been growing significantly. So yeah, the management. Ooh, yeah, this is so exciting because the management is so important, guys. If you ever underestimate the management of a company, you are just, it's not good. So you can see here Mr. C's Hart has been the chief exclusive officer and president of Carlsberg since, hold up, February 2015. That is 7 years ago. Mr. T. Hart serves the global chief exclusive officer and blah blah. So he knows what, holy moly, that is not, we don't want to. The whole management team has 4 years in average tenure, so they've been there for 4 years in average. That is good. That is high. I would say that compared to other companies that I look at. Some of the statistics here on Yahoo Finance, you can see the things that I've been looking at, buying over here, the advertisements. Enterprise value to revenue is laying at 3. That is actually very nice and low. The enterprise value, if you don't know what that is I believe, yeah, that is like the true value of the company. I believe you can say that. You can see here the enterprise value is apparently a bit higher than the market cap, and you know, the market cap, that is the value determined by the stock market. What like how much demand is there? And basically, if you've seen like The Wolf of Wall Street, that movie, or yeah, just whatever, like two brothers could start two brothers could start a side project out in their garage, and they had maybe like bought for 10 grand of worth of equipment, and now they're making like some kind of machine, right? They're selling that, and suddenly people want to buy that stock, and then they pump the price up to like a market cap of like $2 million. You can see, because they only like invested into like 10 grand into the company, so that is the enterprise value. Their cash plus their equity minus their debt. So basically, like, yeah, if you like sold everything, paid off all the debt, that is the enterprise value, and the enterprise value is higher than the market cap. So yeah, that is of course also a good thing when we are looking at this. Guys, that was Carlsberg. I hope you learned something about it, and I definitely had a lot of fun with you guys. You're so funny, so such a good humor that you have, and it's really fun just talking to you. Okay, so that was it for this video. I hope you enjoyed it. If you did, make sure to leave a like and subscribe, and I hope to see you in my next video. Have a great rest of your day. Bye bye.